Welcome back. Well, stable for the markets at this point in time. We have the Nifty, which is higher by around 0.3%. We were talking to Aditya Khemka about the pharmaceutical index and what he expects in 2021. Aditya, well, there were some kind of glitches with your audio, so hopefully it's all okay now. You were telling us about 2021, whether you expect this kind of outperformance to continue. Can you give us a sense on whether you do or not, and what kind of stocks would you be watching?
Correct. For 2020, what created the outperformance for the pharma companies was not exactly the COVID pandemic. It was actually the fact that most of these pharma companies started showing an uptick in the return on equity. So if you see the fall in pharma companies from 2015 to 19, majority of the fall actually happened because pharma companies started showing declining return on equity. And that recovery of return on equity started in 2020. And to my mind, that is the key parameter what led to the recovery in pharma stocks in 2020. So if you were to look at 2021, I don't expect the year to be any different. We will see an uptick in return on equities in most pharma companies, given that they've already done multiple investments in sectors or in businesses where they are yet to ramp up or they are yet to monetize those investments. So that should happen in 2021, and that should continue to show reflect in stock performance and outperformance of the sector versus the broader market. So I don't expect 2021 to be significantly different. Obviously, the extent of outperformance can differ from stock to stock, from company to company. But by and large, I think most of the pharma companies will show improving trends when it comes to earning growth as well as return on equity. So that's my sense of how 2021-22 will look like, for most of the pharma companies that we generally talk about. In terms of what type of stocks will we be, looking at or more, keen on investing in? So there are, companies which have a more acute-oriented businesses in India. These businesses have got very, very disrupted during the COVID pandemic, more because the hospitals were shut. So the patient couldn't go to the hospital, the doctor couldn't come to his clinic. So companies that have more acute sales have been severely disrupted during the COVID pandemic. And I think those pharma companies, will recover in terms of sales in 2021 as people step out of their home and the vaccine takes effect. So, such companies should do relatively better amongst the pharma companies, in 2021 versus what they did in 2020 in terms of the business. Also, if you look at diagnostics, if you look at hospitals, these are again businesses which have been very, very significantly adversely impacted because of the COVID pandemic in 2020. So 2021, again, as things normalize, given the vaccination and everything, I would expect the hospital and diagnostic stocks also to do very, very well going forward.
Okay. So if you had to prioritize, Aditya, in terms of a portfolio next year, what would it be like? Would it be, say, for example, hospitals, diagnostics in one basket, US-facing generic companies in the other, and domestic portfolios in the third segment? So which one would you prioritize?
Right. So I would have all three in the portfolio, but the weightages would be different. And the weightages signal the priority. So the largest weightage would be the domestic-focused pharma companies, simply because I still feel investors generally underappreciate the power of the domestic business, how akin to the FMCG business it is, how profitable it is, how sustainable it is in the long run. I think it's just completely underappreciated by a very large section of our investors. So I think domestic-focused companies are going to be, at the forefront in terms of the portfolio weightage, in terms of the priority in investing. So they will be a very, very large part of my portfolio, in 2021. Then next would come the hospitals and diagnostics in one bucket, because these businesses have suffered a lot in 2020, and they will recover a lot of it in 2021 as people step out of their homes. So we will have a very significant portion of the portfolio in that bucket as well. And the lowest strength in the allocation will be on the US generic side. Although US generics do seem to have bottomed out, pricing erosion does seem to have stabilized. The fact remains that we are yet to understand whether that market is completely broken in terms of economics for the supplier, or is that market going to recover in terms of economics for the supplier. Most of the Indian pharma companies, if you just dissect their balance sheet and P&L into what they do in US and what they do outside US, my sense is some of the largest pharma companies in India today do not make more than a low single-digit return on equity in their export business, which is the US business by and large. Now, those are economics which are not sustainable over a longer term, right? And you cannot do business in India generating 3 or 4% return on equity over a 10 or 15-year period. So one of the two things need to happen, Ekta. Either these businesses need to be turned around to make them more profitable than the cost of capital, which should be about 12%, or you need to shut down the business, roll back the business, and stop the losses, cut losses, as we say in the stock. So I think one of two things should happen going forward, but there is no evidence on either side, which is very strong. So for now, I will not try to sort of put a large part of my portfolio in that part of US generic, where we are still not clear whether the business will recover, whether they will generate better than cost of capital return, or most of these companies will actually end up shutting down the business because they just cannot generate more than cost of capital.
Okay. Aditya, just a quick 10-second answer from you because we were running short of time on this discussion. But something like a Divi's Lab, the entire API play, do you think that will sustain into 2021? Would we see a lot of benefits, in fact, come in for the entire API set of companies? And because valuations are quite punchy within that sector already.
True. So look, Ekta, one 10-second answer is simple. China does exports of API of roughly $30-40 billion. India does exports of about $4-5 billion. Given the entire, China plus one strategy or China diversification strategy, if China loses only 10-15% of its market share, Indian companies can double their revenue base, right? Just mathematics, simple mathematics. So yeah, I mean, given that this China plus one strategy is being globally adopted, regardless of valuations, I think earnings growth in this sector is going to be structural, and it's going to be a good 5 to 10 year story from here on. So I would not fret much about valuations at this stage. I would rather have the best companies in my portfolio within that space, so that these companies can leverage the most when it comes to the China plus one opportunity that is emerging in the API manufacturing.
All right, Aditya, thanks very much for that. Aditya says the bull market in pharma stocks just getting started. And in fact, we'll tell you one of the key triggers. Our colleague Tim C is picking up news from sources who say that over 70 lakh healthcare workers have registered on the Co-Win platform for the first phase of vaccination. And remember that the meeting as well today for the approval of the vaccine in India, the subject expert committee will also be meeting soon. Tim C joins in with all those details. Tim C.
Well, as you rightly said, something important to watch out is that the subject expert committee meeting has started already. It started at 12 noon, and as we speak, the meeting is on. Meeting will consider 3 applications, that is for Pfizer, Bharat Biotech and Serum Institute. What we are waiting to see is whether any of the 3 applicants are able to convince the subject expert committee or not, so that the subject expert committee can recommend an emergency use authorization, post which the drug controller of general will accept those recommendations or not, is something that we'll have to wait and watch during the day. But meanwhile, yesterday, the government took a review of the preparedness of the dry runs and what should be the first phase of vaccination looking like. Well, over 70 lakh healthcare workers have already registered on the Co-Win, that is the IT platform that the government has created pan-India for anyone to get vaccinated. Also, over 2.30 lakh vaccinators have been identified. Over 51,000 public health facilities have been shortlisted for vaccination rollout, and 1.62 lakh private health facilities have been registered already on this Co-Win platform. States have been asked to identify specific days for vaccination. So let's see how soon the vaccine gets approved so that the inoculation drive can begin in India, because the back end is almost ready. Back to you.
Okay, all right, Tim C. Thanks very much for that. So it'll be very interesting to see what exactly the subject expert committee in fact recommends on vaccines. Remember that the WHO has also given its go-ahead to the Pfizer BioNTech vaccine, and Oxford AstraZeneca has also been approved by UK just this week itself. But nonetheless, time for a break now. On the other side, we will talk about the macro picture and what 2021 has in store for us. Stay tuned.